And good morning, good evening, good afternoon, students and traders. Welcome. This is Mike, the FX boss, talking, and this is the Professional Forex Trading Course 101. And today it's lesson 1, right? What is the technical market structure? Remember, everybody, trading is a learnable skill. And what is our goal? Our goal is my goal is to bring you from zero to a millionaire trader in 3 years on average in an institutional way. All right, so I'm here to help you to bridge the gap between how the understanding is between retail traders compared to professional traders, or also called institutional traders. All right, so if you're a complete beginner, just quickly, this is what we're talking about. All right, how to become a professional trader in an institutional way. So give yourself a year to learn. All right, Forex Course 101, it's all about the market. All right, so you start out as an analyst. All right, even if you're a retail trader, so this is you understanding that nobody starts out as a trader, right? I mean, I would wish you that we would knock on the door, you know, on some investment bank, hedge fund, broker, and they would just tell us, oh, there is the desk, you know, and here is the $5 billion account for you to trade. It doesn't work like this, right? So if you are willing to listen to me, we need to understand that if I'm a complete beginner, you know, it's going to take me 1 year more or less to learn about the market, just how the Forex market works. All right? And a few more things, you know, just for the first lesson, you are going to graduate from this course when, number one, you have your chart set up and ready for trading, you have your strategy in place. So during this free course, I'm going to ask you to build your strategy. And number three, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. We're going to work today on number 3. Okay, risk disclaimer, this stream is not trading or investment advice. We are here to learn. And for any questions, you can send me an email to the Gmail, you know, or Skype. And if you want the free manual, you know, also you can send me an email, not a problem. So let's get to it, everybody. Okay, so lesson number 1, what is technical market structure? And we are going to open AUD CAD on TradingView on the monthly chart. Okay, and as you can see, on AUD CAD, the monthly chart, I mean, you can zoom in, you can zoom out a little bit, but nonetheless, what you're going to see step by step is that the monthly chart, you know, is gravitating from the upper band to the lower band. Something like this. All right, now a lot of students ask me why, and truth to be told, I don't know why. This is how I've learned. All right, and also I'm going to try to simplify for you. Okay, we're not going to try to overcomplicate the Forex market. Okay, so from the very basic standpoint, if you want to write this down, it's pen and paper. The Forex market is nothing more than a contract between two countries because of imports and exports, meaning one country is selling stuff to the other country. All right, everybody, this is the lesson number 1. This is the premise. Okay, the Forex market is nothing more than a contract between the two countries because of import and exports, meaning one country is selling stuff to the other country. And it doesn't need to be more complicated than that, believe me. Okay, now step by step, everything starts talking about charting. The forex market, it's 90% technical, talking about in the future, talking about you being a trader and making money consistently, having a strategy, talking about charting and you being a good analyst first. The forex market, it's nothing more than a contract. I'm going to explain. Now, the thing about you being an analyst, hopefully this makes sense, right? You know, you start as if you would be an institutional trader, you would start as a junior analyst. You know, they don't give you on for me too, but you know, me too. I would love to that. You know, I would knock on the door and they would give me the billions and the trillions. Oh, you just trade there and do this. It doesn't work like this, right? I mean, we know it. If you were, or if you have a friend who is an institutional trader or ex-institutional trader, me too, back in time, you know, 20 years ago, you know, we start as junior analysts first. And if you do good, then you're going to be promoted to be a senior analyst. And if you keep doing good, you know, being what we call about 60% effective as an analyst, meaning on every 10 currency pairs, you know, from Monday to Friday, week to week, you assert the direction correctly 60% of the time minimum, then you are going to be promoted to, if you want to be what is called a portfolio manager or a trader or whatever, right? Okay? So, step by step, so looking at the chart, monthly chart, do we agree that this market, it's called, this currency pair, it's called AUD CAD, so we have Australian dollar as the base currency, and then the Canadian dollar is the counterpart. Do we agree that, let me get out of the magnet, do we agree that the market hit the upper band and then went down to somewhere here the lower band, went back up somewhere up in here to the upper band, went back down to the lower band, went back up to the upper band, and now is slowly gravitating, you know, to the lower band. Do we agree on that? If you're asking how do I know, well, look at the chart, it's simple as that. Alright? Now, in between, of course, the market can do anything it wants. You know, it can go up, it can make higher highs, uptrends, lower lows, downtrends, whatever. But nonetheless, the forex market is nothing more than a contract between the two countries. So before we see more examples, let me explain. And Canada, example, Canada, it's a great exporter of wood, right? And again, maybe my English, pardon my English, anyways, hopefully you understand. You know, so Canada, it's a great exporter of wood, right? They have a lot of trees, nature, forests, you know. Now Australia, on the other side, you know, they're an island, and you know, a lot of deserts, and so they don't have a lot of forest trees or whatever. In any case, you know, just an example. So let's say that Australia needs the wood to produce the furniture, you know, or the wooden houses or whatever. Makes sense? So Canada is going to sell, is going to export the wood to Australia, and Australia is going to what we call import, is going to buy, is going to receive the wood, right? Now, here is the question, hopefully it's not getting too complicated. Now, if you are Canada and you are selling to Australia, do you want to be paid in Canadian dollars or do you want to be paid in Australian dollars? And logically, the obvious answer is, all right, if I live in Canada, if I'm Canada, you know, I want to be paid in Canadian dollars. Does this make sense? And vice versa too, you know. So, again, I don't know what would be the example. Let's say that Australia is exporting honey. I know Canadians have honey too, but just an example, you know, for the example's sake, Australia it's exporting honey to Canada, Hanukkah honey, you know, whatever might be the case, and Canada is going to import, is going to receive, you know, Canada is going to buy, right? When you import, you are buying. When you are exporting as a country, you are selling to another country, of course. You know, so if you live in, if you are Australia, would you like to be paid for your Hanukkah honey in Australian dollars or Canadian dollars? And again, the obvious answer is, of course, I want to be paid in the local currency, right? Does this make sense? You know, I mean, if you live in Brazil, you know, and you receive yen, the Japanese yen, what can you do with the yen? Or if you live in Europe and you receive, again, Japanese yen, what can you do? You cannot go to McDonald's in Europe or Starbucks and pay with yen. Agreed? Or if you live in the USA and they give you the Guarani or whatever might be the other currencies, even the euro, you know, you cannot go to the supermarket or Starbucks or McDonald's or whatever with euros, yens, you know, Russian ruble, whatever, you know, they don't accept this kind of currencies, right? Agreed? Make sense? So because of this, what you are looking at right now, the monthly bands, this is the graphical representation of the contract the two countries signed, and they do, all right, because they want to maintain the international trade stable. Okay, it cannot get, it doesn't need to be more complicated than this. Okay, so again, if you have any more questions, you can send me an email to mikefxboss@gmail.com. Anyway, this is lesson number 1. Now, if I go to AUDJPY as another example on the monthly chart, the monthly bands are already here, as you can see, you know. Now, just for you to see, do we agree that the market, you know, hit the lower band, gravitating up to the upper band, going down to the lower band, moving up, gravitating, you know, trending to the upper band, going down to the lower band, upper band, lower band, and finally upper band. So now you have two that I'm trying to prove that everything starts from the monthly bands. When we start charting, the next lesson we're going to learn about how to confirm a trend, all right? But for this lesson, if you can understand that, you know, everything starts from the monthly band. Not every currency pair is beautiful like this one, those two, you know, okay? But this is the international trade, because countries all around the world, they import and export. No brainer, Japanese yen, you know, and Japan, they are exporting what? Toyota cars, Suzuki cars, Hondas, you know, whatever might be the case. And if Japan is exporting Toyota cars to the USA or to Australia, they want to get paid in yen. Exactly, very good, congratulations. So in their local currency, and again Australia with the Hanukkah honey, you know. So because the two countries, you know, and it makes sense, because if you need something, if you need a raw material, you know, it's in your interest to get it, right? For you to produce other stuff, other goods, and so on and so on and so on. Now, AUD USD. We're going to talk about the so I want to show you first the easy ones, all right? AUD USD monthly bands, all right? Canada JPY, beautiful to see, not that difficult to spot, you know, it's in here. Do we agree that the market hit the upper band on Canada JPY, where the Canadian dollar is the base currency, you know, hit the lower band somewhere, you know, messing around, but nonetheless hit the upper band, went down to the lower band, and now messing around for a long time, but nonetheless, You know, it's gravitating up to the upper band, and this is what we call in trading the long-term view of the currency pair. Alright, this is lesson number 1. Now, in between, the market can do anything it wants, but lastly, alright, because of the contract, the market must come to the upper band. Okay, because the two countries signed that they want to leave the value of the respective currencies inside these bands, you know. Alright, what happens, so why is there interest to maintain the international trade stable, and why it's in the interest of the two countries for the value of the respective currencies not to get too much out of the range? And the example right now is CHF-JPY would be the example. Okay, CHF-JPY. So the Switzerland franc is a base currency and the Japanese yen as a counterpart. The monthly band, the upper band is here. Now the lower band would be somewhere down here. All right. Now the Switzerland franc all over the board. If you go to check the, and we can check, you are going to see that the Switzerland franc is the most expensive currency compared to the others. Just an example, all right? So Switzerland is exporting what? It's exporting chocolate, Lindt, Milka, whatever. It's exporting the Rolex watches. It's exporting the banking industry, whatever it might be, you know, could be service related. So if you are Switzerland, and if your currency, you are selling stuff, and if your currency gets too expensive, what is going to happen? You are Switzerland, you are the seller, you are selling Milka chocolate to Japan, you are selling Lindt chocolate to Japan, but you want to be paid in the local currency, in Switzerland franc, but your Switzerland franc, it's getting more and more and more expensive. What is going to happen with your exports? What do you think? This is the Forex market. Exactly. The demand is going to go down. And what does this mean in simple terms? The Japanese, so if I'm Japan and I'm importing chocolate, example, I'm going to start looking elsewhere, right? I'm going to say, oh, dear Switzerland, you are getting too expensive for me. You know, I'm going to go to other countries and buy and import chocolate, example again, just to understand what we're looking at. You know, I'm going to import chocolate from other countries, fair enough? I mean, this is common sense, right? I would do this, you would do this, the companies do this all the time. You know, it's about the quality, of course, but it's about the cost. How can I get the cheaper stuff with the best quality? And countries operate exactly the same, all right? So this is why it's in the interest of the two countries. If politics, it's another story. If they like each other or hate each other, this is another book to read. But talking about the Forex market, everything starts from the monthly bands. And many times, like it's happening right now with Switzerland franc, it gets too expensive across all other currencies, you know. Now this is theory, of course. You know, then the government is going to look at the balance sheet, the money that they earned, and they're going to see, oh, our tourism revenue, and this is for real, this happened last year, this happened 2023, our tourism revenue, it's down 30% this year. Make sense? Why is that? Again, not to get too complicated, if you are from Europe, if you live in Italy, France, Spain, Portugal, Germany, Finland, whatever may be the case, and you are a middle class family and you're looking, well, where should we go to let's take a vacation, but where? And if you're a normal human being, you know, going on the internet and researching, you are going to see that Switzerland, most likely not, because the hotel is double the price of hotel in the other countries in Europe. The meals, the coffee, you know, it's just an example. A coffee in Paris, France would be 7 euros, in Switzerland would be 20 euros. Just an example. So Switzerland, it's become, because of the franc, Switzerland franc, their local currency became so expensive. And when this happens, those are cycles. When governments sit down and they look at the balance sheet, you know, and if they see that, you know, they are not earning much, or the income is down, whatever, 30%, 40%, 50%, then if they have the interest to continue to do business with the other country, then if you're a beginner trader, you're going to hear sometimes the term central bank intervention. All right, so they're trying to bring down or lower the value. You know, we're not going to get into what mechanisms central banks have. This is not the purpose of this course. Forex course 101 is for beginner traders. All right, but you know, just understand that, okay, they're going to try to lower the value of their currency, okay, and try to bring, this would be just an example, CHF, JPY, so they're going to try to lower the value of the Switzerland franc and come slowly inside the band for the other market participants to see that, oh, right now we are going long-term direction for the traders making money, long-term direction, talking about decades, of course. Now it's reversing and it's down. All right, I know it's a lot of information. Rewatch the video a few times, please. I'm begging you, rewatch this video a few times. Send me questions on the Gmail, it's not a problem, okay? I'm here to help you, trying to bridge the gap. Alright? And as I said this in the introductory video, you know, if you are trying to be a trader, a professional trader for 3 years, 4 years, 5 years, whatever might be the case, pat yourself on the back, it's not your fault. You just didn't learn what the institutional traders know, okay? So there are more stuff to learn, but if you're a complete beginner, we're going to start with Forex Course 101. It's going to take you a year completely for free, and after 1 year then you're going to be welcome to what it's called the Forex Course 202, the Advanced Institutional Trader. You know, so there you're going to see how you're going to learn how business is done. Now, if you're an advanced trader, you know, if you've been around the block for 3 years, 5 years, if you know everything about trend lines, multiple time frame trading, candlestick formations, if you have a strategy, you know, if you burned a few accounts, maybe, whatever, you know, then just send me an email, okay? We're going to talk about how you can get into the institutional trader course. All right, moving forward. Now okay, so we have AUD CAD, clearly see the monthly bands. We have AUD JPY, we can clearly see the monthly bands. AUD USD a little bit different, but still Canada JPY, we can see the monthly bands. Euro JPY, we can see the monthly bands. The market going exactly from one band to the other, right? And GBP JPY, we can see the monthly bands. NZD USD, we can see the monthly bands. USD CAD, this is consolidation. Okay, so the I'm going to put this one out. So those are the monthly bands. Alright, now let's look at the some that are not that easy to spot. Let's click on AUD-CHF monthly chart. Alright, now AUD-CHF, so far this would be the lower band, and remember I was telling you that the Switzerland franc, it's the most expensive so far compared to the others. Alright, so the Australian dollar as a base currency, you know, now the monthly bands would be somewhere up in here, or maybe something like this, even better. Alright, and now we are down in here. So the lower the Australian dollar gets, and the Australian dollar is the base currency, this means that the Switzerland franc as a counterpart, it's if lesson number one, right? If the Australian dollar is going down in value, the counterpart logically goes up in value. So the more this currency pair goes down, this means that the Australian dollar is losing value as a currency and the Switzerland franc is gaining. Now remember, Switzerland has a problem right now, okay, in my humble opinion, not a fact, alright, in my humble opinion, but based what we see, okay, so they are trying to, the respective economies and the contracts, they are trying to reverse this, okay. So now we have some, let's check AUD-NZD. Alright, now talking about, we have three currency pairs that are exception to the rule in terms of trading. You are not a trader yet, you are an analyst, this is your first lesson. But AUD-NZD, so this would be the upper and the lower band. Now talking about trading for the future lessons, we need to address that our AUD-NZD, Australian dollar, with the New Zealand dollar from 2013, it's locked in this small consolidation. Okay, what does this mean? Remember, I've talked about the long-term view of a currency pair. So when the market, or if the market is going to hit the upper band, the small one in here, or the lower band of consolidation, then here is where I am going to position and trade and say to my traders, alright, now we are going up or down, this is now the direction. Not the big two, not the big ones. Why not? Well, because simply, you know, as you can see, it's from 2013, so for 10 years it's locked in this small consolidation. It doesn't change the fact that the monthly bands are those two, but talking about trading and charting and strategies, this currency pair, it's making money inside this small consolidation. Alright? So, recap. If you look at AUD-CAD monthly chart, what is the long-term view? Up or down? Should you be buying long-term or should you be selling? And if we trade based on what we see, you know, or as an analyst trying to predict the future, you don't need to be perfect, you just need to be 60% right. Now, the long-term view of this currency pair, it must come down to the lower band, because this is how the Forex market works. Alright? AUD-JPY, what is the long-term view? Remember, the market can do anything it wants. Remember, you have here the price action, you know, the market can still go up, but long-term, talking about the next decade, this market should fall down to this, because, and again, you know, you might be asking, how do you know this stuff? Well, just look at the chart, you know, look at the chart and you're going to see that it's gravitating from one band to another. Alright, now we talked about AUD-NZD as an example. AUD-USD, what is the long-term view? Long-term view, in between the market can do anything it wants, but the long-term view, AUD/USD must come down to somewhere those levels. Canada CHF. See the CHF, see the Switzerland franc, what is doing? Canada, the Canadian dollar being the base currency. See, it's down, 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 down. What does this mean for the Switzerland franc? Exactly, too expensive, too expensive. Alright, so the monthly band should be somewhere in here, trying to reverse the interest for the import and exports. Now Canada JPY, what is the long-term view? Did the market touch the upper band? No, it didn't. So we have one final push to the upper band. CHF JPY we talked about already, you know, it's CHF, it's the base currency, overvalued, so expensive, right? Euro AUD. I'm going to delete a few things, remove drawings. Alright, Euro AUD, we can clearly see that the lower band would be somewhere in here. And when you are charting the monthly bands, don't stress out, okay? Because it's an area, it's not to the pip. You know, if you are asking, oh, should it be like this or should it be like that? Well, I would take those two in consideration. I would not put the lines like the upper band like this, because this would be significant, like, oh, it hit the upper band, so the long-term view now is down. Okay, I would leave it above a little bit, something like this. So the long-term view, Euro AUD, it must come up to the upper band. All right. And the next one would be EuroCAD, and remove drawings. Talking about trading view, when you click on the currency pair, you are going to have different data providers. Pay attention not to choose one that has too much data. All right. Me, nothing special. Me, I'm using FXCM. Why don't you use Oenda or Forex? Not real. I mean, it's just FX. No special reason, but comparing those data providers, you know, as an analyst, you are trying to look at the same chart that the other participants in the world might be looking. Does this make sense? So talking about EuroCAD, I would say, all right, now this is the lower band, somewhere like this, and this would be, so where is the market hit the, this would be then the upper band, all right? This would be the upper band. If you are wondering how to correctly draw the monthly bands, remember a simple rule, all right? If this is the market, you know, and it's doing different stuff, right? Okay, it's doing different stuff like this. So when you are choosing to put the upper band like in here, remember here you have just one. All right, and if you would put the lower band down in here, so I would suggest you to do something like this. Make sense? In other words, you are going to identify the correct areas when you see the market changing direction. Like in here, you know, it was going up, making higher highs, higher lows, going up, but then it hit this level. Not aligned to the pip, it's a level, but then change direction. Can you see? See? And up in here, okay, it went through, but then change direction, right? Okay, this is the logic behind how to draw the monthly bands. Let's go to another one. let's go to another one. It's NZD CAD monthly bands, and to remove drawings. Alright, so if you are going to draw the rectangle like this, right, and you see that, oh, I'm going to leave it like this, right? Now with the same understanding, what about this low? What about this? You know, didn't the market come to this level and change direction? So if I draw the upper band, something like this, all right, didn't the market come down to, give me a second, trading view, didn't the market come down to this level and then change direction and went up to the upper band? Yes, it did, right? So this would be the case where, okay, I need to move my monthly band something like this. By the way, we have another low in here, same story. The market hit this level and went back up to the upper band. All right, so if you're asking yourself how to help me out, how to really, you know, I'm not sure about the monthly bands. Okay, this is the logic. When you see the change in the trend, okay, when you can clearly see that the market changed direction and went from the upper band to the lower band, or from the lower band to the upper band, then this is the correct area, alright? And remember, it's an area. If you have doubts, send me pictures to mikefxboss@gmail.com. Alright, if you are unsure, like, oh, is my NZD-CAD chart correctly? Do I have my monthly bands drawn correctly? Just send me an email, you know. Hello Mike, how are you? Would you be so kind and check on my monthly bands? On this pair, on that pair, whatever. And before we finish, for today, lesson number 1, what is the technical market structure? So AUD-NZD, it's exception to the rule, talking about trading in the future, alright, or determine direction as a good analyst first. You're not a trader yet, alright. The next one, it's Euro-GBP. Euro-GBP, same logic. The market, talking about you being a good analyst and telling your trader, should we buy, should we sell? The market is locked inside this consolidation. Okay, so the short-term view, the long-term view, okay, should we buy, should we sell for the week or the day, whatever, you know, this is the game. This is the field so far. Doesn't matter, doesn't change the fact that those are the monthly bands, but similarly to AUD-NZD, the field that the game is played, you know, making money, you know, is this small consolidation. So you have AUD-NZD, exception to the rule. You have Euro-GBP, exception to the rule. You have USD-CAD, exception to the rule. It's played so far inside in here, alright, and the last one is USD-CHF, alright, it's played inside those two bands, consolidation bands, alright. So if I say, if you're willing to listen to me, if I say when the market comes up to here, if I say, oh, the long-term view is up, this would be wrong. Alright? Oh, but the monthly bands, I know those are exception to the rules. Because as you can see, USD-CHF, so the United States dollar, the American dollar, you know, as a base currency compared to the Switzerland franc, as a counterparty, you know, from 2011, it's locked inside this consolidation. Make sense? So the long-term view, it's up to here. When it gets up to here, we're going to say, all right, now we're going to try to short, try to sell. It gets down to here, all right, no brainer, we're going to buy. As a matter of fact, we are buying, you know, all right? All right, so thank you very much for your time. If you have any questions, please email me, you know, don't be shy. I'm here to help you to bridge the gap. Okay, if you're a complete beginner, it's going to take you, give yourself a year to learn just how about the Forex market works. And the next year, the second year, then you're going to be invited in what is called the Advanced Institutional Trader Program and learn how institutions are making business. And believe me, you know, you have no idea. I mean, those are not secrets, but as a retail trader, you know, unless you work in an institution, you have no idea how this business is done. And I'm not arrogant, I'm trying to help you, okay? It's good news, so if you've been, again, around the block for 3 years and not making it, it's not your fault. There are other things to learn. You didn't learn everything that is to learn, alright? And this is the Forex course too, where you're going to learn what tools institutions are using to make money. Alright? Thank you very much. This is Mike and see you in the next lesson.